Alright everybody, we are back for another video, and today I want to talk about where I think we are in the current market cycle. Because to me it seems like we are in one of the later stages of the cycle. So today we're going to talk about what this means for investors going forward, what to expect. And so without further ado, let's get started. All right, as you can see, I've prepared another board that is going to structure the video a little bit. And first of all, let me apologize. My background looks a bit messy because we are moving in a couple of days and we've prepared everything over the weekend. And yeah, quite soon we'll have a more organized background again. So that shouldn't be the topic of this video, of course, but instead I want to talk about whether we are in one of the later stages of the market cycle, as it is called. I also visualized the market cycle in case you're wondering what the hell is Renee talking about in this chart here, but I'll get to this a little later. So I want to actually start by taking a look at a blog post that I came across today by the great Ben Carlson, and he titled it "New All-Time Highs in Everything." It sort of reminded me of the everything bubble that was coined in the late 2021 period, I think. So basically what he is showing is that a lot of different asset classes are making new all-time highs. And the ones he brings up here, for example, is the S&P 500, which quite recently crossed the 6,000 point mark for the very first time. You can see a chart of the S&P 500 here. Then he also referred to gold, which has been a tremendously well-performing asset class over the more recent time period. So as you can see here, basically ever since 2015, gold has basically gone in only one direction here. What this means, we will discuss in just a second. Then what else? Then he's also including a chart of housing prices in the US. And what he's actually also pointing out, and let me just highlight this here, is that he finds it all the more astonishing considering where mortgage rates are at, being at 7%, which should actually be a drag on home prices. Then he's also referring to Bitcoin. Bitcoin is obviously, I think I have a chart here on Bitcoin as well. Yeah, right here. Bitcoin is also making new all-time highs pretty much every single day ever since President Trump was elected. What else does he refer to? Well, he's referring to the size of the US economy, which has basically grown at quite a steady rate, I would say. Household net worth is peaking. And then he's making a joke towards the end of this blog post. So I think what this sort of indicates, and I think I included it right here as well, if we look at the CNN Greed and Fear indicator, what you can see here are some of the underlying factors that are taken into account when calculating the fear and greed score. And one of the indicators, or one of the factors, is the number of new all-time highs. Where is it? Here it is. We'll get to this again, but basically the fact that we are making new all-time highs in a bunch of different asset classes can certainly be considered a signal that we are probably approaching one of the later stages of the market cycle. All right, just to support the sentiment that Ben Carlson is trying to get across, I also included two charts here. One is from MicroStrategy, so the stock of MicroStrategy, which I would argue, I'm not all too familiar with the actual business, but I think this company, this stock is very strongly associated with Bitcoin because the company has pretty much invested all of its excess cash into Bitcoin. And as a result, well, as I just said, the stock performance is very strongly tied to the performance of Bitcoin. And as you can see, this stock here, for example, rallied more than 150% over the last 6 months, which is certainly something that is or should be considered unusual. I really doubt that the business of MicroStrategy has become more valuable by a factor of 1.5x. And then the other stock that you might not have heard of is actually a stock that I used to own in the past, which by now I consider a mistake, but there were some factors that were hard to predict too. But I think management has really, I hate to put it this way, but made a fool of themselves when they quite recently announced that they are also going to invest most of their cash reserves into Bitcoin. And I think they are making a fool of themselves here because, without getting into too many details here, but the core business of Semler Scientific is basically dying due to some regulatory changes this company that is operating in the healthcare space has to deal with. And as you can see, the business is actually destined to decline, I think. And nonetheless, the stock performance over the last 1 month is only going in one direction, upwards. The stock too is up 80% in just 1 month. And as I just said, this can certainly not be justified by the fundamentals of that business, which I think are deteriorating. And again, I think there's another example showing that we are probably approaching one of the later stages of the market dynamic. Speaking of the market dynamic, and now I'm going to turn to the chart I was showing you earlier. I think what investors have to realize is that obviously markets are volatile because human beings are the ones who are making the prices in auction-driven markets like the stock markets. And as a result, as human beings are emotion beings, we tend to experience phases of euphoria and phases of fear, and obviously some more nuanced stages in between. And I would argue that we are probably like somewhere in this range here. I feel like when you just look at the comments and tweets you see on social media in the financial space, there's a lot of excitement with regard to a ton of different asset classes, with regard to certain industries. The AI industry certainly comes to mind, and also with regard to individual stocks, which I will get to a little later again. So I would say we are probably somewhere here. It's hard to pinpoint where exactly. And what's also important to highlight is that obviously the quote unquote party, so everyone celebrating the great returns they're enjoying more recently, this party can go on for quite a long time. So just because we are seeing all of these signals of valuations getting a little stretched, company fundamentals seemingly being less relevant right now in the current moment in time, all of this can continue to months and years even. And now you may wonder, well, how do you position yourself in such a period? Well, and this is something that I think I addressed in one of my last videos. I want to encourage you to remain bottom-up investors, focus on the businesses you own, even though it seems like it doesn't really matter right now, but I can promise you it will matter again eventually. And if you keep that focus, like really that laser focus on the businesses you own, and track the performance of the underlying businesses, I think you will come out ahead. Just be careful to not get overly excited about the performance of some of your underlying holdings. At some point, the price these companies are trading at may be too detached from the actual value of the business, and then you might actually have to sell or at least trim certain holdings. But that is, of course, a decision you will have to make on a company-by-company basis. So what else have I prepared here? So I was earlier referring to the CNN Greed and Fear Index, and quite interestingly, we haven't reached the extreme fear score yet, which I feel like isn't really reflecting what I'm seeing on social media, at least, and also what I'm experiencing when I look at my social circle. Like more and more people talking about Bitcoin, talking about, well-performing stocks. That is something you, in my opinion, usually only see once we get to the extreme greed stage. And what you might not be aware of is that if you head to the Greed and Fear Index, you can actually select the timeline of the score over time. And you can see that we are actually not really trading at, or we're not at extreme, like a top level, like compared to the rest of the year. I don't know, the current score isn't particularly high. And what you might also not be aware of, but I already pointed to this earlier, is that you can find the development of various scores or factors that are considered when calculating the Greed and Fear score. If you scroll down a little bit, so we are actually at extreme greed levels if we just look at the momentum of the S&P 500. However, if we look at the number of new all-time highs, I think this is on a daily basis. We are actually not really in a stage where a ton of stocks are making new all-time highs on a daily basis. And there are a couple of different factors here that you might want to take a look at yourself. Then I was earlier saying that more and more people in my social circle at least seem to be talking about investing. Andrew, for example, who you might remember from some of the interviews we did and our portfolio roasting sessions, he recently shared with me that even his mom was sending him a message asking about the performance of stocks after the Trump election. So things like that usually occur in the later innings of the market cycle. And here I included a tweet from EV to Free Cashflow Addict who shared a similar observation, I think. So he wrote, I'm not an expert on timing, and he's talking about market timing, but when people who don't know how to read a balance sheet tweet about their 20% plus returns for the week, we are probably not in the first innings of the rally. And again, this is what I was describing myself earlier as well. Or similarly, T.H. Birkern, who I also have quoted quite frequently more recently, he wrote this in-depth tweet that was basically explaining that, well, just looking at PE multiples alone is not valuation work. And I see more and more people in my social media feed just referring to simple metrics without understanding the nuances of all of these metrics. And I think, again, like when a bunch of know-nothing investors, and here I'm quoting Warren Buffett because he referred to them as such in one of his letters. If a bunch of know-nothing investors all of a sudden feel like they are the next Warren Buffett, this is a sign that, well, eventually we will see quite a decline in stock prices. When this will be, I don't know, but eventually the party will stop, as I alluded to earlier. And just to wrap it up here, I wanted to refer to the stock of Tesla, which again, I think is an example you can reference here to show you that for certain stocks, obviously that's not true for all stocks, for certain stocks, the stock price seems to become more and more detached from the actual value of the underlying business. So Tesla stock has been going up for quite some time, basically again, ever since Trump's election, the stock is skyrocketing. And I want to reference Obscurian Valuation, the Twitter user, who made two interesting points with regard to Tesla, or he shared two fun facts, so to speak. So one is that Tesla now has added 3 BYDs in the last 5 days in terms of its market cap. And I think this is astonishing because BYD is certainly like an electric vehicle company that is also like really successfully executing right now. Which I know that Tesla's most recent quarter, I think, was quite successful. But if you look at the last 6 or 7 quarters, the actual business performance of Tesla hasn't been that great. And then he shared another fun fact. Let me just pull it up. Then he also wrote, using the market cap gains since last week and annualized earnings, that would make them, so that's Tesla, the most expensive car company at a 40 times PE multiple. Too bad there's another 800 billion on top of that. So basically the 40 times earnings valuation is only based on the market cap gains Tesla experienced over the more recent past. Then I was asking on Threads whether people think the 1 trillion market cap that Tesla has hit today on Monday is justified, and I received this response, which again shows you that, I don't know, it feels like people aren't really putting in the work to do real valuation work right now. Just to wrap it up here, I shared another chart on Twitter, which was shared, I think in a fund letter, and it basically shows that even though the price of some stocks is really getting completely detached from its actual value, and obviously we like this if the price is significantly below the value, but not the other way around. Just because this phenomenon can be observed in certain pockets of the market, that doesn't mean that there aren't going to be opportunities elsewhere. Okay, and I don't want this video to become overly long. I just wanted to sit down, talk a little bit about my observations. Sometimes I like to think of myself as the quote-unquote voice of reason in a world of extreme emotions, in the world of stocks, and I try to fulfill that mission that I'm on sort of in this video. So let me know what you think of it and some of the observations I shared. I'll see you in one of my next videos, hopefully with a more organized background. Take care.